So how is it that I still profit off these meme stocks even when they have a large sell-off happening for the day, right? Now, it's very simple to answer, right? And it's simply just because when I enter a position, I know when I'm gonna exit that position. And I know that may sound silly, but a lot of individuals who get into this market, especially with the meme stock momentum plays that have been happening, a lot of individuals, they buy in, they make a profit, but they don't know when to sell, when to take profits, and they end up losing once that sell off happens. So I'm gonna highlight a recent trade in this video and kind of just break down a couple of things. Hopefully this video does help you out. If it brings any value to you whatsoever, make sure to hit that like button because it really does help out with the YouTube algorithm. With that being said, let's go ahead and get started. Alrighty, so we're over here on the Webull platform. This was the platform I used to make this trade yesterday. Now yesterday I made a video talking about ticker symbol CLOV. I explained why this meme stock ran up massively, which it did almost like 170%. If you guys want to watch that video, I explained why. And so let's go ahead and talk about this trade. So I bought in at $22.48. So it was around this area over here where I bought in, right? And I sold at $24.84, right? So it was around this area over here, right? Now, how did I, make this profit of 10% from here to here? Was it because I'm psychic? Of course not. I wish I had a crystal ball, but, unfortunately I don't. And so what it is that I do to make these trades is simply just a strategy of knowing when to enter and knowing when to exit, and also using stop limits, right? And stop losses, right? So we're gonna go ahead and talk about that. So I talked about how these meme stocks, they run up, they offer a lot of momentum, and I took a small position using Webull, right? This is a new platform that I'm gonna be switching. If you guys are familiar with my older videos, I primarily use the TD Ameritrade Thinkorswim platform, but I'm using Webull simply just because the Webull platform offers a lot of tools for traders. And on top of that, they let you trade in the after hours and their orders get filled pretty well, right? So I actually bought this trade at this time. It was already nighttime. The market has already closed. So when you guys see these bars over here of gray, right? This gray bar, the market's closed. When it's black, that means the market's open. So I actually bought in the after hours of this ticker symbol, right? This was a meme stock momentum play. And I bought simply just because we crossed above the 9-day exponential moving average, which is this blue line that's highlighted. So that was my signal to enter, right? So I always go with the trend, and when things break down, I sell. Now, you could clearly see that I could have, sold here because, as it started going up, following the trend, and it went up, it broke down here, and it sold. And it broke below the trend, right? It sold off. Now, why did I not sell here and instead I sold here? Well, the problem was this was in the after hours, right, where the market's closed, and I was sleeping because I was not up at 5 in the morning, right? So this could have went bad, but I had a stop loss. So this wasn't gonna, kill me. But the only problem is stop losses, they don't tend to work in the after hours, right? So that's one thing you got to keep in mind. So of course I waited to the market to open. As you can see, even though it broke below the trend and it kept going down, eventually it broke above the trend, going up again and still hovering up. Again, I'm sleeping, so it's not like I'm actively trading this. So we open up in the market and it opens up at $28.85. So why did I not sell? Well, simply because, let's put it, I had a stop limit and a stop loss. And I had a stop limit. I'm going to go ahead and kind of explain this. I had a stop limit at around $30. So around here, when the market was open, it was going to automatically sell for a profit if it touched this area over here, right? So automatically, even if I necessarily woke up late because I just didn't wake up and the market still opened up without me, if it touched this area, I would have sold it. That's what a stop limit does, right? But then I also traded, and let me go get a horizontal line. I also had a stop loss. So I bought it, you guys saw or heard, $22.48. So as it started moving up in the after hours, I did see that. I put a stop loss right around $23.80, right? So let me try to kind of put that right here so you guys can visualize that. So of course these orders are not going to work in the after hours. That's the flaw of swing trading, right? Which is why, with swing trading, you don't want to really put too much when you're doing these meme plays all in one position. This is going to be a separate video for talking about position size, but for the sake of this video, we're not going to dive into that and just explain what's going on. So when the market opened, it obviously didn't touch $30. It broke below the trend. So why did I not sell below the trend? Well, I had my stop limit or my stop loss right here, this line. And I started moving my stop loss up. And I don't know why I drew that line, but I started moving it up slightly more and more and more. So just in case if the stock does start bouncing up, guess what? I'm moving my stop loss. So this way, if it's for some reason ends up going down, it automatically sells for me. And I was guaranteed to make a profit at this point because if you guys, paid attention, I bought in at $22.48. So when the market opened, it was guaranteed a profit. If it started going down, I had that stop loss set in place. And if the stock would have continued moving up, what I would have done is continued pushing my stop loss higher and higher. So I could have probably, took away this stop loss and then put the stop loss over here. Or then if, let's say, the stock ended up going higher, I could have put the stop loss over here. So as the stock trades higher, I'm moving my stop loss. So maybe it's going to touch my stop limit and automatically sell. Or maybe it might almost touch it and then come down and boom, trigger the stop loss. So that's pretty much what I do to lock in profits, right? So I either sell at a resistance that I set, or I sell at, when there's validation of the stock breaking below the exponential moving average. Now, why did I not do that in this trade? Simply because I gave myself room for the stock to run up, right? So as long as I knew no matter if it was going to fall down, I had that stop loss. I didn't care if it was going to break much more lower than this because guess what? I have my stop loss set, right? So that's just something I kind of want to explain, why I'm able to, trade these meme stocks and still make a profit. Now, I'm going to go ahead and take the drawing tool out and start deleting all these, little trend lines and supports and resistances because we don't need them. It clouds up the chart. And, of course, I like simple trading. So let's also take a look into AMC, right? And same thing, AMC, another meme stock play, which, sold off. We also have BlackBerry, which is another ticker symbol that I called out, which today, it sold off and then it ended up running back up and then sold off again, right? So a lot of these meme stocks, if you kind of, zoom out, they had this similar pattern that I highlighted in yesterday's video where they run up and they sell off. And the problem is individuals, they'll do the right step in buying in, right? Maybe they buy in because they see it going up, cool, or maybe their friend told them, whatever. But you're not selling, either when you want to take profits or, just, selling at validation of it breaking the trend, right? And the thing is, when it comes to trading, it's all about risk management, right? Sometimes I have trades like this trade where I didn't, and when I say this trade, I'm talking about yesterday's trade, where I didn't capture the $28.85. I didn't capture it, right? And there's times where the trade, I might have just, let's say, for example, it touched $30, but the stock went up to $40. I still would have sold at $30 and locked in profits. And I think something that gets overlooked is individuals are too focused on making the most that they end up, losing because they're not locking in profits. To me, I'd rather lock in profits and secure a win than just hold without any plan, without any stop losses, without any stop limits, in the case that the stock falls down. I can't tell you how many times I've seen traders be up in a position and they don't sell it and they don't put a stop loss to mitigate it, actually their risk of losing more, and they actually end up in a losing position. So that's why it's really the stocks, honestly, in my experience, is a game of strategy and probability. And if you're just kind of guessing along with it, it's not going to be sustainable. Yeah, some individuals might have predicted it at a good time to buy and a good time to sell, but the longevity of that in your trading career is going to be very short. You're not going to be able to do all that unless you have a crystal ball. So really, that's the main topic of the video. So for those of you guys interested, I probably am going to be setting up more trades on Webull. I think I'm going to probably transfer around like 10,000, maybe 12,000 into this account because as you guys saw in yesterday's video, I took a small position. I mean, I barely had money in it. No skin in the game. but that was simply just because I was testing out this new brokerage platform to trade with. Now I've been using Webull for a while, but I haven't tested out their after hours with buying and selling that often. Or that much. So I was really just trying it out. I really like the platform, so as I like it, I'm gonna start adding more into it, and I might make this my actual trading account. Now if you guys see value in using this trading platform, again, you could sign up. I'm not saying that you have to. There's a ton of other brokerages out there, and they all offer different tools. So you find what you need. But if you are interested in signing up for Webull, I have a link in the description below. If you sign up and deposit $100, you'll be eligible to receive 2 free stocks valued up to $2,000, right? And this is not a joke. When I first signed up with Webull, I literally just signed up just to get the free stock. I wasn't even interested in the platform. And I got a free share of Google, which at the time was worth $1,200. Google's now worth $2,400. So I got $2,400 just for signing up with Webull, right? So I came for the free stock, but I ended up staying, and now, probably going to use this as my main platform just because I like what the Webull platform has to offer. So if that's something that you're interested in, maybe you just want to get the free stock, just click the link in the description below, sign up, and, get that free stock. But if, you actually do see value in the Webull platform, maybe you might want to move your Robinhood account into Webull, maybe your Fidelity account, right? At the end of the day, it really doesn't matter because these brokerages is really just tools, and you just find whatever tool gets the job done because that's what tools are for. But with that being said, I don't want to make this video really long. Hope this video really helps out. If you have any questions, you guys know that I tend to answer a majority of the questions in the comment section below. Again, make sure to subscribe if you haven't done so already, and tap that beautiful like button, and I'll see you guys on the next video.